Mr. Lee, after 43 days, the longest government shutdown in U.S. history is finally over, but the new funding bill only runs through January 30th. Do you think that this is genuine progress, or is this just Congress hitting the snooze button on the next crisis? What do you think?
Well, I think the market's actually answering that question today, right? The market is down quite a bit.
Yeah.
If you look at major indices, Bitcoin started kind of strong today, and then now it's down, about 80, 89, 90 basis points for the day. So I think the market's saying, no, this is not legit. I mean, we're going to be right back at it in January 30th and have to have this whole fight all over again. So it doesn't seem to me like anything's been solved. And hey, we're in a fourth turning, so there's no surprises here.
Yeah, ain't that the truth? And, the Fed also missed an entire month of jobs and inflation data, and they'll head into their December meeting basically guessing on rate policy. So my question to you, Lee, is how dangerous is that kind of data blackout for markets, and could that uncertainty actually end up helping Bitcoin in the short term?
Well, because the Federal Reserve has said, right, Chairman Powell and the board has said that they're going to be, quote, data dependent. So they're going to rely upon all of this government data. Now, if you subscribe to something like Trueflation or other more real-time data sources, you have the data all along. But if we're only relying on the government data, then you're right. They're kind of, as he said in the last FOMC press briefing, they're driving in the fog. And so as soon as all this data comes back, I think they'll find that they're way behind once again, right? Because now they're walking back doing rate cuts. Powell and a number of the other Fed governors are trying to walk back rate cuts for December, which the market pretty much thought was a lock for December for sure.
Yeah.
And even the dot plot suggests that, right? That the Fed governors themselves have suggested that would be the case. But here we are, they're trying to put doubt on it. If I were a betting man, and I'm not betting, not financial advice, but I'm going to imagine that we will still have a rate cut in December. I mean, the employment picture is just deteriorating.
Right. And like Polymarket and those online prediction things were having it at like 90, 95%. But yeah, now this new wind of more hawkish talk comes out, or tone comes out from Powell. So now we're all kind of waiting in the wind. We'll see how it goes. But I think you're right. I think eventually they are going to cut it. And historically, Lee, Bitcoin tends to rally when Washington looks dysfunctional, like investors are quietly voting no confidence in the system or something. So do you think that this reopening changes that narrative at all, or is Bitcoin still the best hedge against government gridlock around?
I mean, it depends on your time horizon, but I would say, yeah, typically Bitcoin does serve as that hedge for government misfunction. If you think back to what was it, 2019 and the repo market crisis, or some of the bank failures in a couple of years ago, right? Bitcoin did quite well actually, and then here we are, it's just kind of trading along with the rest of the markets. So there's been a lot of things that have changed since 2019 and since 2023 with the ETFs. You've got options trading now on the ETFs, especially IBIT, which has some of the most options open interest. So now we're kind of playing Wall Street games, right? They're able to hedge their exposure, they hedge their upside and their downside, and you've seen volatility really start to come in on Bitcoin, and as well as some of the other assets like MSTR, MicroStrategy, whereas all the other high beta plays are getting crushed. So the game is definitely different, right? But I think over a long time horizon, I mean, what do we think, honestly? Is Bitcoin going to be higher or lower in 4 years? I say higher.
Right. Well, yeah, if history rhymes or repeats, it's going to be higher. I don't think anyone who's ever bought Bitcoin and held it for 4 years has ever been underwater. So I think we all expect more of the same. And, now that agencies like the SEC and CFTC and the IRS are back at their desks, ETF approvals and crypto regulations are also supposedly back on track. So Lee, my question is, do you think we should expect any real movement there, or are these just bureaucrats dusting off their keyboards to stall a little bit more?
I mean, we have an administration that is adamantly pro-Bitcoin, adamantly pro-crypto. So I think you're going to continue to see favorable policies, right? And the OCC has come out very supportive of crypto assets and banks being able to hold crypto assets. Chairman Powell said the same thing, with appropriate risk controls, banks can hold Bitcoin and crypto assets. JP Morgan's out there saying you can, use it as collateral. So clearly, there's a lot of forward momentum, dramatic 180-degree shift from the last administration that I do believe will continue. I think that's durable.
Yeah, and we have something that very well could be coming very soon that I want to talk with you about in a second regarding these new stimmy checks that Don Juan has been talking about. So you and I are going to chat about them right after this, because Donald Trump is back on his favorite campaign trail activity, and that's promising people free money. The former president has reintroduced the idea of giving Americans a $2,000 tariff dividend, a stimulus-style payment funded entirely by revenue from tariffs on foreign imports. The concept sounds pretty simple, right? America taxes imports, and those taxes go straight back to the people. Basically, he's pitching a Make America Refund Again program. But as usual, the details are foggier than a White House press briefing. Treasury Secretary Scott Bessent quickly clarified that he hasn't actually discussed the idea with the president and that no formal plan actually exists. If the $2,000 tariff dividend does happen, it would likely follow the model of the pandemic-era stimulus checks. The same ones capped by income, $150K for families, $112K for heads of households, and $75K for individuals. People above those thresholds would get less because apparently inflation is progressive now. But here's where the math stops making sense, and fast. According to the Committee for Responsible Federal Budget, if those payments went out to both adults and children, each round would cost around $600 billion. Trump's tariffs have raised about $100 billion so far and are projected to generate $300 billion per year. Now, Trump's team hasn't released any draft legislation, any math, or any indication of where that extra $300 billion would come from. So unless China suddenly starts buying Teslas in bulk, that $2,000 check is coming up a few zeros short. All right, we're bringing Lee back. Lee, Trump is floating the idea of giving every American $2,000 tariff dividends funded entirely by taxes on foreign imports. On paper, sounds patriotic, but do you see this as real economic policy or more of a campaign trail gimmick?
Well, we have to go back to, the circular Trump meme, right? He wants somebody to do something. He suggests something dramatic and hyperbolic. Everybody freaks out and loses their minds, and then he ends up kind of either walking it back or tacoing, as we like to say, right? Trump always chickens out. Mm-hmm. So I clearly this is a trial balloon, I would suggest. I mean, I can't imagine that this is real. And it was really interesting to hear Treasury Secretary Bessent kind of try to, I don't know if walk back is the right term, but try to address this whole thing in the media over the last couple of days, and suggesting 100,000 for families, even lower than, as you mentioned, the COVID level was for the stimmy checks. And it's like, $100,000 is not exactly wealthy anymore. I mean, yes, that's a good amount of money, but the market is very different from 2020, right? Everything is much more expensive. So it would be very interesting, I guess, to see that the people that are supposed to be helped as part of this whole America First policy be cut out, because many of those folks that may be making $100,000 a year might be blue collar, et cetera, and to be cut out and have those monies instead go to others who maybe aren't as productive or aren't contributing to the economy. So that's going to really create some problems for his base. Not a political commentator, but just kind of looking at it, that seems pretty strange.
Yeah.
So.